All right. Good evening and welcome back to the first live analysis session. Yeah, this is your host Harsh on behalf of GTCFX. Once again, a warm welcome and thank you for tuning in. So let's get started. Good evening, everyone. Let's get started off straight away without wasting a moment here. Please kindly acknowledge if you are able to hear me proper. And also the screen. Thank you. Before we begin, just a standard risk disclaimer. Anything that would be discussed here should not be construed as any form of investment advice or trading encouragement. We are doing it solely for the education purpose. As always, just for the sake of continuity in the session, I might be switching off the camera once we start. Sometimes the bandwidth goes haywire here, and we don't want the session to be disturbed, if you don't mind. All right, let's get started off with the session. Okay, straight away, the idea of this session is primarily not to teach technical analysis or any form of Elliott Wave Principle analysis or anything. We are here to implement or directly implement on the existing chart setups live uh, and help every one of us find out high potential trade setups. For learning process, we have already started the Hindi education and we'll be launching the English one very soon as I've already discussed with some of you. So let's get started off. Let's jump into the Elliott Wave analysis and probable high potential trade setups. Let's start with the euro, please. I'll be doing more of the work here, less of talk. As the wave principle suggests, any movement, five waves, uh, indicates the major directional move of one higher degree. So most of the charts that we are going to analyze, five of them at least, we will be analyzed through the period of 2 years, since around October, November 22 until now, as of today, to just give you an idea about what the larger structure looks like, and then we boil down to a 4 hour to an hourly and try and find out the actual trade setup. Okay, so just hang in there as I quickly plot. So 5 up has been already followed by potential 3 down. So larger degree trend is up. We've also seen a corrective move A, B, C. This could be a WXY as well, which is quite complex. We want to simplify the session here. Ideally, when there is a five-wave movement followed by a three-wave decline, and if the three-wave decline is complete, that is what we are going to find out next in 2 minutes now. If the decline is complete, we are going to see five-wave movement again in the same direction as the previous one. I repeat, sir, five-wave movement as the same direction as the previous one. At least we are going to see another five-wave movement. Let's try and find out if we are done with the corrective drop, because complexities arise in the corrective waves, not in the motive waves. There is enough price evidence which is suggesting that the corrective move is done. I'm drawing a channel here. The channel has been tested. You see the channel has been tested here. That is the first proof. The second proof is I've done the Fibonacci ratios. The entire rally, 1, 2, 3, 4, and 5, is settling down around the 50% of the Fibonacci ratio here. That is proof number 2. Proof number 3, if you start counting the waves here, it is 5 up, followed by a complex 3-wave corrective decline. Now wave C can take 5 waves, or it can take 3 waves as well if it is a WXY complex correction. I believe that we are quite close to completing the corrective move. So let's dig in further on a smaller time frame. See, there are two counts. One is the high probable wave count, which looks like the direction from here is on the north side. 5-wave movement. All right. And then there's an alternate count. If certain price level break, then there would be an alternate count in picture. Let's discuss both of them. So the high probable wave count is up from here. We need to stay above 1.0330 low for the bulls to remain active from here. Just in case if prices drop below 1.0330, the next level of support is going to come around 1.02. That we will look around when the price action reaches. Okay, let's dig into the hourly charts and find out if we are good to find a potential trade here. So first we did the wave count. I'm going to do a small time trend line, the conventional technical practice. There is a breach of the trend line and prices are moved into the north zone. Okay, so which boundary? The boundary which is being worked upon right now, or could be worked upon right now, is this one. All right, step by step. Once you are through with the boundary, and once you're through with the larger degree time frame and the larger degree trend probability, you just find out the recent boundary which could be worked upon and pull out your Fibonacci ratios. Now, there is a possible chance for a decline to 50% or the 60% mark, and then pick up from here. All right. In any case, prices should stay above 1.0330, sir. All right. If the 78% is gone, then the alternate count would become our preferred count. In that case, there will be one more low, or there would ideally be one more low below 1.03, prices settling down towards this zone, 1.02, and then we take up another call from there. Right now, the high probable trade setup looks like immediately there should be a decline from here towards the 0.618. So we don't really recommend a long trade at current price. We are trading just below this 1.06 handle. Watch out for a price decline towards 1.043050. That's the 61.8, the best place to enter. There is a 5-wave decline of 535, possible corrective pattern which is also being unfolding right now. So maybe around 1.043050, we pick up a potential stop loss, a protective stop loss would go just below 1.0330. The risk is around 150 pips, and it could be taken towards an extension. As I said earlier, the extension is going to be 5-wave rally, but the short-term extension or projection could be this one. All the red figures here, that is 1.102 something. All right. Okay, so that is the high probable trade setup for euro. Let's get down to the dollar index. I normally follow this technique. We start with the daily chart. We look out for the wave counts, the Fibonacci ratio, the trend lines, etc. And then we drop down for a potential trade setup on a 4 hourly chart or an hourly chart to find out an optimum entry. Okay, let's do the counting here as well quickly. The larger degree, October 22 onwards, it's been wave 1, wave 2, wave 3, wave 4, and wave 5. For those who already practice Elliott wave, the fourth wave turned out to be a triangle. Normally, it is a triangle preceding the thrust wave, fifth wave lower, and that has been neatly followed by a corrective wave. Corrections are usually very complex. I'm just, for the sake of simplicity, I'm typing an ABC. Actually, it's a WXY, it's a 333 structure. We will cover those in details later on in the theory session. Again, the Fibonacci ratio is very important, 50% push, and the channeling technique. The channel has been tested again. So the resistance has been met already. If we are good in this count, if we are good what we have done, then a corrective ABC is probably complete and dollar could resume largely its weakness from either current levels or possibly around the 61.8 mark, maybe one more leg higher to complete that 5 wave rally and to complete the structure as well. All right. So the overall trend, when you are done with the daily chart or a weekly chart, 90% of the time we should be good with the overall trend. So the overall trend, the larger degree trend, is going to point lower from here in 5 waves. And a simple technique to find out is, if it is an ABC correction, just count your wave 1. It's around 115 to 99, that is 1500 points. From this top, just less 1500 points, it would come around 92, 93. And then you can play your Fibonacci extensions as well. Let's check out if this direction is done correctly, then somewhere around 92, 93 should be the Fibonacci ratios as well. It is around 93. So we're all good. That's a long-term perspective. Keep the long-term, bigger picture view in mind always. And then it's not, this time frame is not going to give us a trade entry. It's only going to give us a directional. To find out trade entries, we keep it as it is and move down to an hourly chart or a 4 hourly chart, whichever is comfortable to you. Okay, I like working on an hourly chart most of the time once done with the daily. So here's your hourly. And for those who are still interested, because the wave principle, the beauty of wave principle is this. We have the wave counts on all time frames, and it is all the same. You can count 5 waves here, okay, quickly. So coming back straight to the boundary, which is the boundary which is being worked upon right now, right from 107.50 through that low. It's a 38.2% pullback right now. Ideally, we should be entering at a 60% pullback or a 50% pullback. So that would be the range where we would like to enter. The range is 106.70, 80. The risk will go just above that high, which is around 107.60. And the reward, you can just take the Fibonacci extension from here. And that is a short-term reward. The long-term reward we have already discussed earlier. It has got potential to drop all the way towards 92, but it's going to take several weeks and months to reach there. Remember, we were working around 2023 November, December, and I could remember we were projecting $109 index by the next 12 months. Now we are here. We just tested 107.50. Possibly we could push one more time, but then it's turned over. All right. So short-term target 101 from here. All right. Let's move on to the third one, which is the yellow metal. Okay, I would like to do some periodic wave count first, as we did for the euros and the dollar index, around the same region, October, November 22. That was minor wave 1. You see the three wave, A, B, and C, minor wave 2. I'm taking the liberty of straight away putting this as minor wave 3. We are now looking for a minor wave 4, and then it's going to go towards minor wave 5. I'm going to explain why I put wave 3 here in just 1 minute, because gold has extended the third wave, and within the third wave, the third wave is also extended. So if I take just one more moment to print the third wave, it goes like this: 1, 2, 3, 4, and 5. And I'm going to change the degree because there cannot be two degrees in the same wave. I just change the degree from minor to minute. Minute means minor. If minor is a father, the minute is the son. Okay, as simple as that. So within the third wave, there is a 5 wave rally. Okay, and the beauty is within that third wave, you see the third wave here, there is a 5 wave rally again. 1, 2, 3, 4, and 5. So if I want to label this chart correctly, what I'll do is I'll pick up 1, 2, 3, 4, 5. I'll quickly label this as 1, 2, 3, 4, and 5. And then don't forget, we've got to change the degree. Don't get confused. It's very simplified. When in class, I would define that in a very simple way. Right now, we don't have the time to do so. Okay, so we we have we have an entire family here. The three is father, the circle is the son, and the bracket orange is the son of the sun. So that's how it goes in the wave theory. So this third wave, in short, was an extended wave. If complete, if we've done correct, then we are going to see a fourth wave decline. Now there are parameters to find out where the fourth wave will come and end. Ideally, the fourth wave settles down around the 38.2% of the wave 3, and also if you do the channeling, it will come and settle around the channel. So this zone, let me draw a highlight. This is the zone where fourth wave would settle around. And how it is going to form, ideally it would take something like this. But I doubt it's going to go like that very simple way, because wave 2 was very simple. Wave 2 was straight. Wave 2 was 5, 3, 5, a double zigzag. Normally, if wave 2 is simple, wave 4 normally is complex. So what I foresee is this to happen. Something like this. It goes up, retests the high, and then drops lower again. That will be an expanded flat. Either it could be an expanded flat or a triangle, but We don't want to speculate on that. Simplicity of the chart. Gold ideally has completed wave 3. It should settle down for a wave 4 decline somewhere in the region of 24, 20 or 30. It could come directly from here, or it can go up, make a high, test it, and then drop. So we are not really recommending any trade setup on the daily chart. If we go back on the uh, on an hourly chart just in a moment, let's do that. This is the direction. So high probable short term or medium term trade setup would be down, but then there is one more leg left. So if you are a directional kind of a trader, then you would not want to take this risk on the downside. You would want the price action to drop lower and then buy this potential 2430 zone for one more high above 2800. It can take us towards 3000 levels. Again, how to find out the targets? Very simple. Just take your Fibonacci extension tool, pull out through the wave 3 and bring it down to wave 4. That is hypothetical for us right now, but I've done so. And the next target could be 3150. That is a potential upside. There is one more move left for gold on the upside. All right, so aggressive traders might want to take a risk, but if you are a conservative or a trend trader, avoid taking short positions. Rather, look to buy around the 24 mark. Again, if you want to find out aggressive short-term trade setups, the only thing you do is move your pointer to an hourly chart. You see, Elliott helps us every single step. Can you see one, two, potential three, four, and five? Yes, sir. What it means is this move is incomplete. So possibly we are going to see a push higher first and then lower. So if you go short right now, it's going to be too risky. Better wait for the price action to drop lower. I would take this boundary as my primary boundary short term. It's already bounced at the 61.8%. I would possibly allow maybe one more drop for the structure to complete and then go long. All right. So ideal entry would be somewhere around the 25.98 or 26 mark. The risk would go below that, and the reward. This is a short-term trade setup. This is not for investment purpose. This is not for the long-term traders, the short-term traders. All right. Somewhere you need to allow a drop uh, and then go long. But remember, please, there is one more step, one more high, ideally left for gold towards the 3100 mark. So rather than taking or rather than getting on the wrong side, it would be more convenient or safe if we wait for this decline and then go long for a potential rally towards 31, 3150. All right, sir. Okay, now one more interesting chart we can pick up. What three more charts to go for this session. If you do have any questions or suggestions, please feel free to type in. I will take questions as and when I analyze. I mean, there's no need to wait for asking something at the end. You can be very free. The moment we are free with each other, the best part in these live sessions is no one is prepared. Okay, we just go with the flow. The only thing we prepare or we know is the historic price action. Okay, once again, I need to change the degree, but I will do it in a moment. Let me point out the wave structure first. So this is the Dow Jones future chart. Stock markets are on fire. They say it's going to rally. It's going to not stop because Trump has come and he's going to do this or do that. Or fundamentally, many news are coming across. But what are the charts saying, sir? The charts are saying from around the October 22, and this is not the end. I can take the chart all the way towards 1930 on a monthly chart, and I can show that five waves are completing at five different degrees. But it's not required for this session. For this session, at least, let's understand that five waves are completing or just near to completion starting October 2022 until now. And the projection of Fibonacci projection for the Dow Jones is possibly towards the 44 or 46,000 mark, which is just about 1,000 points higher from current levels, if at all prices go higher. So if you look at the risk reward ratio, I mean, for the sake of this 1,000 points rally, I would not suggest, or we would not suggest you to buy the stock prices or buy the stock market at any point in time right now. It is ideally you should wait for this rally to complete and the first decline. Now, if you go by the short-term time frame, that is wave one, wave two, wave three, four, and five in the making. So you don't need to wait, or we don't need to wait until prices break below the 28,444 or 38,444 mark. We can simply plan our trades the moment it breaks that low. The reason why I'm showing the Dow Jones chart, just for the sake you understand what the stock markets are possibly wanting to do, just about one more high, and then potential reversal on cards. All right. And one last chart before I request you, if you have any charts to uh, analyze, please type in if you want me to analyze any particular chart. You can please type in if you want me to analyze any particular chart, sir. I will pick up only one last chart, that is the VIX. Okay, we have what is the trend of dollar JPY. Okay, just 1 minute, brother. I'll complete this and pick up dollar JPY. It's wave one and wave two, or AB on the dollar JP, on the VIX. Now this volatility index is inversely proportional. Yeah, we will learn to mark waves on the class session, Tanmay. What I wanted to show was the inversely proportional VIX is ready to move higher. That means the stock market any point of time should be ready to move lower. All right. Now I'll pick up GBP USD quickly, and I will follow it up with the dollar JPY as well. Very quickly, I'll do the wave counts. As 1, 2, 3, 4, and 5. And then we've got this corrective pattern is different than euro. It is an expanded flat. So expanded flat, B goes higher, and C is somewhere here. It's complete or it's just near to complete. So the overall trend, sir, for the pound or GBP USD is higher. This is the overall trend. We are already completing or near to completing the corrective decline somewhere, which is already complete, or it might drop one more time. All right. And but the trend is higher. So look out to buy, the larger term trend is higher. So we would be looking out to buy pound just as we did in the Euro USD. All right, now it's at the moment it's breaking higher, so the larger trend is in tune with what the news has come in or what it's coming in right now. I think this is not the best price to enter. Allow some decline and then enter. Now we had a query for dollar JPY as well. I would bring up the daily chart for that. I don't know if anyone is watching what figures have come out. Ideally, I would like to focus on the charts here right now. If you're watching, you can type in if there is something very surprising here. Okay, I would like to take the weekly chart 1 minute for the dollar JPY, sir. Before we go on a daily chart, just one quick chart view. This is 5, a triangle, and another 5 wave complete. This is a 3 wave rally complete. So it's a corrective wave. Ideally, there should be a 5 wave decline on a larger time frame. Okay. So if we go on a daily chart and if we try and make out what the boundary is which is being worked upon right now, that is the boundary, that is the one which is being worked upon right now. Because I can count 5 waves here straight away: 1, 2, 3, extended, 4, and 5. And the prices have reached the 7-8% mark as well. So ideally, uh, the risk goes above that point, and the entry, not right now. Maybe you can wait for slight rally and then decline. So if we go by the extensions or the Fibonacci targets for the dollar JPY, it is in line with the overall dollar index or dollar weakness, which could be lying ahead. There might be one more high, as I said, there might be one more high in the dollar index as well, or the dollar JPY as well. So please have your protective stop losses in place. But if we are doing it correctly now, right now, I mean, the next stop could be potentially lower from here. But for the potential lower targets or lower direction to hold, prices should ideally be below 160 or that high. All right, that is the chart for or chart review for the dollar index. Sorry, dollar JPY, sir. If may I pick up any other charts? Okay, so euro has not given us a chance to enter, but the overall direction that we discussed about the longer side is working out right. Ideally, a decline should come through, and then you should be buying. If you have any other charts that I would want to review, or Bitcoin or any other chart, please let me know, sir. If you want me to analyze any other chart like a crypto, or I mean, I can analyze Bitcoin for you because it's quite hot right now. Okay, the daily chart on the Bitcoin. Again, we'll start off from the October 2022 lows, November 2022 lows, sorry. That is wave one, 3 waves down, wave two. It's only about practicing, sir. Once you start practicing, the numbers or the waves start popping up in your eye like a football. All right. See, if I say wave one here, it has 5 waves within. 1, 2, 3, 4, and 5. If I say wave 2 here, it has got three waves within A, B, and C. Three wave, third wave also five within. Fourth wave, three waves. Five wave, fifth wave, five waves. So it's only about practicing, and it's not about knowing everything. It's only about knowing the right thing. The five wave is very close to completion. If I do an extension right now, uh, it has exceeded that figure. So the next figure in line with the Bitcoin rally should be somewhere around the 123 mark. So 123 potential still remains. The Bitcoin might be having one more upside to go towards 123 mark, or 114 or 123 could be the next upside. But it's going to be very tricky if you're going to buy it now. I have a question. Yeah, that's what I'm Mayurji, I'll come back to your question in just a moment. I'll let me finish Bitcoin, please. So, the thing is, there is only one more leg possibly left for Bitcoin. We are in the fifth wave right now, possibly the wave three, a third wave is extending. So you've got to be very careful in executing this buy, because you never know when it's going to stop. It's going to be around 115, maybe 123, but we are in the last leg of the rally. So you got to be very careful. Uh, have your stop loss just below that 91 mark to be on the safer side. That would be your protective stop loss. If you're going and buying ahead Bitcoin, that would be a protective stop loss. All right, now let me take this question here. Okay, so what Mr. Mayu says is that the numbers in NFP were what? Since the figure is 228, this would result in USD getting stronger. Okay, so all this is very relative. Okay, and I'm not saying it's not possible. So figures have come better. Okay, so fundamentally, euro dollar should rally. Okay, let's have a look at the dollar chart. Just a moment. I just want to make a point here. Okay, so I think all of you were here when we were analyzing this dollar index chart, correct? It was showing that the dollar index might be wanting to decline according to the charts and not rally. Did any of us know what figures are going to come, what numbers are going to come? We did not know. In fact, I didn't have my screen also open. I asked you what the numbers are. So the trick is like this. There are two ways to analyze a particular series or chart. Yeah, Forex, that is not Forex Factory, that is FX Street. But I'm not watching that FX Street screen right now. I am on the chart screen right now. Okay, so the idea or the point that I was trying to make here is, brothers, if there are two ways to analyze, one is technical, the other one is fundamental. Now, the simple way for to explain the difference is there's actually no difference. If you stand in front of a mirror, you're going to see your image laterally inverted. Yes or no? Okay. We're all going to see ourselves laterally inverted. That's all. Otherwise, we are going to remain the same. So the physical body is fundamental, and the reflection is technicals. If you know one thing good, you don't need to really look into the figures or worry about the others. So that's what I like to follow, is the chart story, and I like to tell this chart story with the grace of God. Right now, the dollar index is declining, but this might not be the right place to sell. We've got to wait for a potential pullback. The entry point was suggested 106.60. That would be the ideal place to sell dollars. Okay, euro is rallying against what the fundamentals have come. Technicals were already pointing a rally, but this is not ideal place to buy. Wait for a decline towards 1.0450 or possibly 1.05 and then go long. All right, that's it. That's as simple as that. Again, one more thing, if you, no matter how much you watch the fundamentals, no matter how much you read the fundamentals, we are not going to come to know the fundamentals unless the figures are out. Do you all agree? Unless the print is out, the only thing that is happening in the market is speculation. But if you really focus on the charts and the counts, the reality is right in front of your screen. And this is not happening for the first time with me, with the grace of God. This has happened over and over and over again, when sometimes I don't even know what I've kept the screen open. Okay, now let me just see. It is 2:27 here, but I kept the screen open only because of this session. Normally, it's sometimes personally I don't even watch what is going on fundamentally. I'm not saying or not against fundamentals. The only thing I'm trying to say is I don't know, or I would like to emphasize more on technical analysis. Otherwise, we all know what inflation, how it affects, how the job data market affects. But this is very easy and very simpler for an engineer like me. Please, according to NFE data, Dixie should be bullish, but it is showing a downward move. That's what Adnan. That's what I just discussed. According to the fundamentals, the dollar index should be going higher, but right now it is going lower. That is what this chart was telling us. We were predicting lower, but no way I'm trying to say that we are absolutely 100% correct. Right now, we are on the right direction according to the technical analysis, but we still need to allow some pullback before the dollar index drops. That's why I'm saying if you are good at reading a chart or good at predicting with the help of technical analysis, fundamental data or fundamental figures, whatever they come, would only be a noise for us. It would not affect the trading style or the trading direction that we just analyzed. In fact, that's why we kept this session before the NFP, so we could analyze the direction irrespective of what the figures are going to come. And then when the figures actually come, we can see in real time what actually happened. Does it answer your question, bro? Adnan?
Yeah, thank you.
No problems, no problems. I would be more than happy to take any other questions or 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 maybe any other chart that you want, please. Since it was a okay, Mayur says it was since it was a high impact news, is it to affect the currencies for sure, or it might sometimes not even impact, just like it did now. That's what I'm saying. It was a very high impact news, but actually speaking, the market is the boss here. We are just moving around the news flows. 95% of the traders are moving around the news flows, but the boss is the market. Let it decide what it wants to do. And 95% of the time, or maybe 90% of the time, the market has already decided what it wants to do. And it has also told us what it wants to do, but it tells us in a different language. That is what the sign language was yesterday. USD CHF. Okay, just a moment, please. I normally don't follow dollar CHF, but dollar CHF is uh, should be in line with, ideally, it should be in line with the dollar index as well. Just a moment. Okay, I need to just bring up. Okay, it's lagging actually. I would go in very quickly. I would not do the labeling here. This is October 22, correct? That was an impulse. This guy is already lacking. It's lagging behind. A, B, and C should have gone here, but it's reflecting or it's reversing probably from a lower level. It could be a running flat rather than a standard flat. It could be a running flat. So that it's quite possible that the dollar CHF corrective phase is over, or it is going towards a triangle move. If it is making a triangle, then it's going to be like A, B, C, D somewhere here. It won't break below that low, and then E somewhere here. That triangle is complete, and then it would go lower. So dollar CHF is not in any kind of a trend right now. It would either form a triangle dropping towards 0.85 from here, and then a rally again, and then a decline. That decline would be final. Ideally, if you want to go dollar CHF, let me find out a trade in the shorter time frame, bro. Okay, this is the boundary. See, once you start practicing, you can really quickly find out the boundaries. So that is the main 5-wave decline. That's a 3-wave rally. Can you see this 3-wave rally? It's not so difficult. A, B, C. And right now it is doing a 5-wave decline. Let's take an extension. If it is correctly done, then potential next level could be somewhere around what it is, 86. So, but watch out for a bounce. The price action. See, never take anything for granted, please. It has to stay below that high. For this bearish count to work, it has to stay below that high. This is what is the best thing about Elliott Waves. It gives us a lot of objectivity, not no emotional trading. That is a projection, but if it breaks above that high, then it's something else happening. So have your protective stop losses always in place, everyone. I don't know who asked it. Abraham, that is dollar CHF for you, sir. Okay, is it done, or you want me to do anything else, or should we call it a day today? If you have liked the session, kindly send me your feedbacks to my email. Everyone has it. Harsh.jappi, harsh.jappe @gtcfx.com. It would help us find out more. If you need more such sessions, please send in your feedbacks also about the current one. At the same time, if you're done with asking or knowing anything more, if I then I would like to say thank you, a humble thanks for tuning in, everyone. And yeah, thank you, Mr. Agarwal. Thank you, Piyush. Thank you, Alexander. Thank you, Shashank. Thank you, everyone. I normally have a practice of seeing you guys off first. Please do send in your feedbacks at harsh.jappi@gtcfx.com. It would help us decide what is the requirement, and we can plan accordingly such sessions in future. Thank you, Rohit. Thank you, Mr. Khan. Thank you, everyone. Thank you, Narendra Bhai. Thank you, Adnan. Thank you, Bhakti. See you next time.